Foss Swing Day Trading. It is April 9th, 2021, and futures are at it again. I haven't posted a video since last Friday. This past week was my work week, and I don't publish videos as often during my work week. Also had a medical condition come up, a little knee injury that actually put me out of work for a couple of days, and had to get that attended to. But I was able to return to work last night, and I finished my shift, and I'm back home, and now back to trading and making videos. So I did do some trading over the week, and it's been a productive week for me. The futures are trading a little bit down right now. We had quite a move in all the markets on Thursday. New highs. The NASDAQ, the FANG stocks just kind of took over, took charge. The electric vehicle or EV stocks have been kind of laggards, but hopefully that'll turn around soon. Again, I hold NIO, NIO, I hold Tesla, TSLA. I'm also in Airbnb, which has been lagging a bit. I now hold 200 shares of Airbnb, so I hope things turn around. Today looks like it may be a little profit taking going on. The inflation concerns continue. Now there's talk of all this increased demand with people. Now that many are vaccinated and COVID cases are dropping, people are going out more, and there's a high demand out there. And because of supply chain issues, there's low supply. So with that imbalance, expect to see prices hike. The Fed keeps reiterating that this will probably be transient, and by the end of the year, things will balance out. But whenever there's fear of inflation, it puts a little fear into the markets, and that's kind of what we're seeing right now. A little pullback. That's the NASDAQ 1 minute chart. That's the 15-minute chart. And right now I'm sitting on 2 contracts in the NASDAQ. As you can see, got a little loss going on there. And the only other holding I have is one mini S&P contract where I've got a little loss going on there as well. And I just bought that, and that went straight down after I bought it. So, and that's where I bought it, right at this level, 40.93, and we're already down to the 40.89 level. So I do have a bear call spread in the Qs on my options and stock trading account, and in a way, these futures purchases were to protect that spread. If the NASDAQ rises significantly, then it'll take away my spread profit. On the other hand, I could lose a lot more if the market crashes on my futures account than I will gain by that bear call spread expiring out of the money. So not a good way to protect my spread, but I have done well with my futures trading over the week, and my account is at a new level. I am now in the 50s, 51, 40, 46. I was actually as high as 52, but after commissions, um, you know, I was back down in the 51, 700 range. Now it's gone down since the market's pulled back. Now I'm down to 51, 400. But just to be in the 50s, wow, that's quite a move that my accounts made over the week. And it's happened because of a lot of trades that I've made throughout the week. And I'm not going to attempt to um, discuss each trade, but I'll just show you. This is the Nasdaq Micro E-mini 15-minute chart, and you can see there were a lot of scalp trades, and so on a daily basis, just lots of trades. And any professional will tell you that I'm probably over trading, way over trading. I don't see it that way. Every trade I made was uh, based on price action, and where the price of the um, the Nasdaq was trading at the time that I placed the trade in relationship to the moving averages, and and based on what I felt was a good reward risk reward trade. And just about every scalp trade I made was profitable. There were a few that weren't. Uh, uh, Grant, there's no way you can trade that often and not have some losing trades. I did have some losing trades, but no big losing trades. And I did get out of some losing trades at a reasonable time. I mean, I I I had a lot of patience with some of my trades, but when I saw a few of the trades go in the wrong direction, I'd say, "Hey, I just got this wrong. Let me get out," and that was the end of it. But most of my trades were profitable, and this is some trades I made in the in oil, and I wanted to show. Let's see if I've got the right one. Again, this is 1 minute oil, so I always get lost when I'm chasing the 1 minute charts. Um, well, let me go to the 15-minute. Okay, now maybe I can find it more quickly. Okay, here we are. Now, let's see. Now let me go back to the 1 minute. And just be patient with me. All right, I think I've located it. Okay, yeah, here it is. Okay, so I just wanted to show you this one trade that I made in oil, and uh, I just wanted to show this because for me, the secret of being successful with trading futures is knowing the commodity that you're trading, having a good feel for how it trades, and having the patience to let it kind of play out. Um, so I keep a close eye on oil. I don't trade it that often because trading is pretty risky. Buy one contract, and if it moves against you, you can lose a lot of money just buying one contract. You buy several contracts, and you're losing thousands of dollars. And if you really stick your foot in there and buy 10 or more contracts, and you can lose five figures easily, quickly. So have to be careful with the oil patch. But here's a trade I made. I was watching oil, and it was going up to the 200-day moving average. That's the red line. That's this line, and it would go up, break through the 200-day moving average, and pull back. Go up, pull back. So it's doing this, and you can see that I'm making some scalp trades. Pulls back, and below the 200-day moving average, I'll buy, and above it, I'll sell, and below it, I'll buy, above it, I'll sell. And so we pulled below it, and I bought here, but my thought was that, well, you can see it, we had come down a significant amount in oil from here, and we had tried to rebound and come back down below the 200. And at first the 200 was kind of acting like support, then it was acting like resistance. Then it started acting like resistance. And so here it was acting like resistance. And that resistance persisted, but we were challenging it over and over. And now that I look back, I guess maybe I was a little early on this, but I bought here, and we pulled back more, and then we went up to challenge that 200-day moving average. Now, I could have sold here and made a profit because that's had been its trend to go up to the 200-day moving average, bounce, the 200-day moving average. If you're below, it's going to act like resistance. If you're above, it's going to act like support. So resistance bounces back, bounces off the 200-day moving average. Then it goes back up and challenges it again. And again, 200 is resistance. So it's hit it twice. It goes up, didn't quite get there this time, comes back. And it is still going, kind of in a consolidation right here. So my thought was we already had a big pullback. And where I got in here, we were trading mostly above where I got in, except occasionally we would dip below, but then only temporarily, and we would come back up. And again, the 200-day kept acting like resistance, and I said, sooner or later we're going to break through there. And I was thinking that it was going to happen the next time we go up from here, but we pulled back, and then we get this little odd behavior. We get right up to the 200-day moving average, and we start just tapping and not hardly moving at all, tapping it. And this was a long stretch to hold. I mean, that was a long stretch. If you look at all my other trades, most of my other trades were over within, minutes, seconds to minutes. This trade just went on and on and on and on and on and on. These are 1 minute candles, so that's a good 30 minutes. And then we're tapping the 200 day. I said, yeah, we're going to eventually break through. We're going to break through. But then instead of that happening, we get this red candle and then this big red candle down. Boom. And so now I'm in the negative again. And I just thought that was odd that would happen. And when it happened, it just made me want to jump in, not to take a unhealthy risk, but my thought was that this big pullback was going to then jettison oil across that, like a springboard, spring back and launch forward and get over that 200-day moving average. So I jumped in here right here, and you can see I bought 4 contracts. So now I had these 4 contracts and that 1 contract. And the next candle was a big up candle. And that big candle was enough to erase any losses that I had from this first contract, and was, a significant gain on my account, even without getting back to the 200-day moving average. So I sold 1 contract here. So I wanted to, get some profits in case we pull back for any reason. But instead we got another big candle up, and I legged out 1 contract at a time. So 1, 2, 3, 4. And I sold that 5th contract right at the 200-day moving average. So I anticipated that this would happen, that we would go through it, finally penetrate it, which we did. And we went significantly higher, as you can see, to here, until we got another pullback. But I was very pleased with my gains. In fact, that was the trade that put me over the $50,000 mark. And then we got this pullback here. I did a few more scalp trades, but that was kind of my trade of the day. And that's how oil trades, as I have noticed. Kind of pulls back. It can have, oil, I have noticed of recent now, with the market, nothing stays the same. What happens in the future doesn't necessarily reflect what happens in the past. But the way oil has been trading of recent, it has surged higher and stayed higher for a while. Then you get the big drop lower. And the same thing, it'll dive, and then it'll consolidate, and then it'll make a big move higher. And that's what it's been doing. And so it's, to me right now, while it's trading in this pattern, it's more dangerous for me to buy an oil contract when it's already made its move higher. So when oil is up like it is, here, like, you get this up move, big up move, get all the way up to here. That's the danger zone. That's where you're really risking. You buy a contract up here thinking this is a momentum move and oil's just going to keep going higher. That's when you lose everything. You get these just one red candle after another, and you just go down, down, down. Your consolidation go down more, go down more. It's better to wait until you're down, it's made that big down move. And a lot of people won't agree with me with this. But when it's down and when it's down way off from a recent high, to me, that's the safer time to get in. And I mean, down, but consolidating, not just trying to catch a falling knife and it's obviously going straight down. You don't want to jump in then. But once it's down, consolidating, maybe having some little ups and pullbacks to down, then, and like you see this big green candle here, and then you get a pullback here. Then you say, well, that might be an opportunity to get in for a scalp trade. Right now we're getting a little pullback, but we're getting a pullback in all the markets at the moment. Now, this was the range that I was waiting for. This is where I wanted to get in. And I probably would have bought at this level. But the entire market is pulling back considerably. And right now, the NASDAQ has pulled back even further. I'm now significantly lower in my account. I've got a loss of 269 in that account, and I have a loss of 400 in this account, just from the time I started this video. So we're really getting a pullback here, but I'm not overly exposed to where that's gonna dramatically hurt my account. I'm still at 51,162.96. So I'm glad I'm not holding a lot of contracts right now, and but it's around this range where you can get some good opportunities for scalp trades for almost like very high probability trades. So I'm gonna, since I'm already in, since I just bought a contract, I'm gonna just kind of watch, see how things play out for right now, and wait till the market opens before doing any further trading. Kind of let things settle down, because I mean, this could end up being a real smackdown. We've had recent highs in just about every equity indice. So getting a dramatic pullback is not out of the question. But it may be an opportunity to get some scalp trades during the day. I'll be watching the market closely. Hoping not to give too much back, so I don't want to jump in and find out we're just in the middle of this sell-off. So right now I'm just going to hold off and wait to see how things go after the market opens. And we're only about a half hour from the opening. Okay, well, I hope it's a good Friday trading day for everyone. And I'll be giving updates either later tonight or sometime Monday morning.